Welcome back to Your Average Investor. Today we're going to be talking about some upcoming earnings reports that you're going to want to put on your calendar for the week ahead. We had a wild week this last week, SPY hitting all-time highs again, GameStop and AMC and their little short squeezes. So let's talk about what we have coming up. Number one, Palo Alto Networks, PANW. These guys report earnings Monday morning, tomorrow morning, after hours. So this is one to watch for a couple reasons. Number one, this is one of Nancy Pelosi's top stock picks right now. So if you follow the Senate stock pickers, Nancy Pelosi took a position in Palo Alto Networks a while back, and then when it dipped like this, she doubled down on her position, buying I think both shares and long dated option contracts. So if you got in the dip here or got in the dip there with good old Pelosi, you're sitting up with a healthy, really healthy actually already, gain of about 25%. And they report earnings in just a couple days. Now it's important to see this last dip was due to a earnings report that Wall Street didn't like. They were sitting up at almost $400 a share, right? $370 a share, dropped all the way down to $260 a share. So there's a couple ways to look at this to play it. Number one is if you just like it long term, you get in and buy it, and that's great. What I'm going to be looking at, though, is something a little different. I'm curious to see what these open at Monday morning. You can see the option chains are quite juiced already with premium, right? I wonder if it ran in after hours. Nope, after hours it's a little bit up, but just pretty much the same. So look at this. This is what I'm looking at, right? There was a massive drop last time. Not saying that it's going to be a repeater, but 6 days out, these contracts expire. So this would be what you would call a YOLO position, because if it doesn't work out, the position's going to zero. So you want to position size accordingly, but I may consider this. Well, again, we'll see when the market opens. And what I'm looking at is this level here. Let me put a price line here of about 265. It cut a little bit below that on this dip, bounced off of it there. And if we zoom out a little bit further, this was prior resistance. So you can see the resistance here, 265, 265, and a little bit kind of down here at like 260 before breaking above. So what I would consider doing tomorrow is something like this, right? Here's the 265 contract. I don't want to buy this contract. I want to get something a little closer in the money, maybe like these 290s. But then what I would also do is I would sell the 285, excuse me, I'm not on the 290. There we go. There's the 285. Like this. I would be buying the 290, selling the 285. This would cost $120 to enter this position. And if Palo Alto Networks tanks again on earnings, my max profit on that is $377. So almost a 200% increase there, right around 200%. So that's one way I'm looking at playing it. Of course, if you wanted to be really gutsy, you could just buy puts outright. Oh, and same with calls if you're bullish on it. You just buy puts outright, and you know, in order for this put to be profitable after earnings, because you're going to get hit with some pretty wild theta decay, is you're just going to want it to be in the money, $15, $16 in the money. So say you buy this for $1,600. Well, you need the price to dip below $300 just to break even, and then anything above that is gravy, right? So if you get to, like, say, 270 here, at that point you'll be up about 200% if the price moves down to 270 by the what day? By Friday when these expire. But again, right, that's the 200% increase. You can get that same sort of increase here. Whoops, let me reverse that. Right here, 200% gains and a lot less capital required. Of course, if you wanted to match it, that'd be fine. So now on the call side, maybe you're saying, don't fight Pelosi. She's the best stock picker in the world. She beats Warren Buffett. She beats Jim Simmons. Then you'd be looking to possibly play some calls or just go along with some stocks. Potentially, even if you've got enough cash for it, take 100 shares and sell some covered calls, collect this premium, or same thing on the other side, if you've got enough cash for a cash secured put, collect some of this premium, because this premium is going to be juiced based on the fact that earnings are coming up, and it's at a very interesting point. You can see here, this is where it came up to before selling off again, this $320 range. That's what's so interesting about this is either, I mean, I would be shocked if on earnings if it just stayed flat. I would guess it dips back down to this level, or it shoots up again, maybe 340, somewhere to help fill this gap right here. So that's Palo Alto Networks. After hours is also Zoom, which had one of the most wild run-ups during COVID in the world. Like, just check this out. So pre-COVID, here's Zoom chilling at about $70 a share, and then they just went nuts, almost $600 a share, and then massive dip down, 90% down at the all-time lows here. They're basically 90% down right now, maybe like 87% down. But look at this, right? So Zoom, let me zoom out a little further. Get it? Zoom out. So, oh, by the way, if you guys haven't already, please subscribe to the channel. It does a lot to support us and help us out as we're working to monetize this. We've got a lot of fun things planned as we continue to grow, including some big giveaways that we'll eventually be doing. So stay tuned for that. We're starting small with the giveaways. We're going to get big, though. I maybe let something slip I was going to hide as a surprise for later. Oh, well. Here's where Zoom looks interesting, right? Is we've got this floor of like $60 a share. That's pretty well established. And we've got this ceiling of about $75 a share. Now, they could come out on earnings, and it could be a disaster. If it's a disaster, I don't think Zoom sells off all that much, right? Like, if you look at these last several times, like, I mean, their earnings are still good. People still use Zoom. It's just not ubiquitous with everyday life because we actually go out and do things now, where during COVID, everything was shut down. And so, I mean, like that's the crazy thing is it's not like they were making more money during COVID, right? 99 cents per share here, 92 here, $1.22 there, $1.33. It was like 36 is their highest. And look at this, $1.34, $1.42. They actually made more money per share on their latest earnings report, but I guess future growth is maybe like COVID accelerated their growth so much that almost everybody that needs Zoom has Zoom, and so it's like, who are the new customers they're going after, right? And maybe there's a lot more competition with Microsoft Teams and other stuff like that. But I like the play. I wonder how juiced the premiums are. They're okay. If you're looking at that week, that's not bad. I would actually consider this a very interesting play, both on the call and the put side. Like, you could go like this, right? 533. In fact, let me show you guys a really cool tool that we just built for you. It's not released yet live. Here we go. There's the website. So look at this. Options Profit Visualizer. So what I'm going to do here is I'm going to say we're going to take two legs of Zoom, and one's going to be a call, one's going to be a put. What did we have? We had the call 65 and the put 64 for 260 and 280. So we're going to go, the call was a 65 for 2.8. We're going to do one of those. And this was a 64 for, was it 2.6? Or did I get those backwards? 2.8 on the put, 2.6 on the call. Okay. 2.6 here, 2.8 here. And then I can just hit calculate here, and I'm going to get a nice options profit graph that shows me my break-even prices as well as profit either way. So if this is just assuming by expiration, right? So my maximum loss here is $540, what I buy in at. The maximum profit is actually theoretically infinity, because if Zoom goes to $1,000 a share, then that's all upside for you. But this is the important part, is the break-even points are at 58.6 and 70.4. And this is how much the stock would have to move to get there. You'd have to have either a decrease of about 9% or an increase of about 10% in order to break even on this trade. And these give you some important price levels, right? So 58.6 and 70.4. If I go back to the chart here, I mean 58's all the way down here. So low chance that you break even on the put side unless it's just disastrous earnings. But 70.4, right? That's just around the corner up here. So that's break even. Anything above that is, and again, this is break even by expiration. So if on earnings they jump and they're at $70, you'll be making money because there will be a little bit of time decay left there. Maybe 72, 74, you make a little bit more money. But this, it's an interesting prospect, and you can see here on their last earnings they jumped from 63 up to about 68, and then over the next couple days they climbed to just over $71. So I like Zoom. I probably wouldn't, if I were to play options, and I'm not committing to this yet. I don't know if I like it enough to play options on it. I probably wouldn't worry about the put side. I'd probably do something on the call side, and I'd either do what I just showed with just buying like this call 65, right? Or maybe I'd do something like this: buy the 65, sell the 66. This is going to cost me $43, and my max profit is going to be $57. So let's do this too, right? We're going to go call. We're going to buy the 65. We're going to sell the 66. And what was the 66 at here? We're going to get about 210 for that. So we're going to change this to 210 and hit calculate. And here again, it shows you, right? So my maximum loss is $57. My maximum profit is $50. So you see that here. 50 and 50. I don't know where I got 67. I was looking at a different number. 50-50. And the break even is 65.5. So if Zoom is trading at 65.5 or above after their earnings, I break even. And if it's at $66 or above, I make my maximum profit. I double my money there, right? 100% gain. And according to Thinkorswim, it thinks it can get me a better fill and maybe even have a little more than 100%. So then I just say, okay, let's put a little price level here at 66, right? $66 a share. That's right in the middle of this range. So if there's any good news whatsoever, very likely we're passing 66. So that's an interesting play to me. I think that would be how I would play this if I liked options. Now, as far as long term, I don't really like Zoom as a long-term company. I think they'll become a staple that like people use. I just don't see how they become much more innovative and grow much more than they already are. It's like Zoom's the video conferencing company, and I don't know how they break out. Like where do they have room to break out of that box and start offering new innovative things that makes them grow significantly faster, right? It's like they don't have hard tech. Or maybe that's it. Maybe they develop some hard tech like video conferencing things, and who knows. Anyway, moving on. DDD, for those that like, not actually quite, yeah, I mean, anything under 5 is technically considered a penny stock. So 3D Systems is a 3D printing company. These guys are on my watch list for the week. They report earnings. They haven't said what time yet. I'm assuming it's going to be after hours. I believe, yeah, after hours is when they did it here. That was, yeah. I believe it's going to be an after hours earning call. But they are significantly down, $3.50 a share from their all-time high of here, $56. And I actually kind of like the company from maybe like a Hail Mary play type thing to say, hey, you know what, this company could be going bankrupt because, well, they did turn a profit on one quarter, but overall they're losing money. Let's just take a look at FinViz real quick. And let's see, so they, yikes. That's actually pretty brutal. So they made sales of $488 million. Their income was negative $307 million. So, gosh, that's actually pretty tough there to justify. But if they have something really amazing happen, then the turnaround could be there. Revenue decreased a little bit. Yeah, I don't know. That's a tough one. I like it from the fact that it's if things turn around, then we see another massive rally. Probably not up to $50 a share, but maybe up to like 10 to 15. There's not even that much short interest in it, only 8% short interest. So interesting one to have on the list. This one might go into the challenge account. Like if I buy something and I have a few, like $350 left over, maybe I buy 100 shares here, or maybe I look at, let's see if there's, the premium there kind of sucks. So on the put side. On the call side, it's not bad for some covered calls maybe. All right, moving on. Tuesday, Lowe's reports in the morning. Remember from our video yesterday, Home Depot reported last week, and they had, if I remember correctly, they had an initial drop, and then it recovered right after that. It wasn't a big drop, but initial drop, and they recovered right after. And it looks like Lowe's is got a very similar chart pattern to Home Depot. So probably the market is not expecting anything wild out of Lowe's. They're probably saying, hey, Lowe's, Home Depot, it's basically the same. It's like Uber and Lyft. They're basically the same thing. And so I don't think there's going to be much here for the option chain. I would guess Lowe's performs about the same. maybe they have some sort of surprise, right? And they're doing way worse but that's the thing, is if they do have a surprise, it will move violently, because it's like, oh, Home Depot wasn't surprised, but Lowe's is actually doing worse than we thought, or better than we thought. Great company if you want it long term for its dividend and the fact that, Lowe's, Home Depot, they'll always be around, but one to keep on the list just to watch, see what happens. AutoZone also reports tomorrow, and they're at an incredibly high place. Like, if you look at their stock performance over the last 10 years, it's just been phenomenal, and I don't see any reason why you would want to play AutoZone to the downside. They don't really have a history of incredibly sharp sell-offs. I mean, even here, right, like this right here this was COVID, so that doesn't even really count, right? Like, even when the rest of the market was selling off like mad over these last couple of, like, let's see, right? Let me just show you SPY again. So here's SPY, right? Look at this big drop on SPY in 2022 from 475 all the way down to 350, and AutoZone actually ended up significantly up on the year. So I don't know if there's a good reason to play this to the downside. I'm not really interested in the company from a long perspective either, but I will be one to watch the earnings and see. If you wanted to try to play options on this, I mean, you would just be paying a ton of money. That's like $10,000 a contract there. So, maybe you'd do a spread, right? So you can get that spread down to a $500 cost, and if it goes up on earnings, you double your money. Same thing here, right? You could do a spread to the downside, and if it dips, you could make $600 on that. Let's see, Toll Brothers. These guys are home builders. Also, incredibly strong rally. The difference, though, is that Toll Brothers does have significant periods where it pulls back. And after this incredible rally for the last couple of years, $40 a share, it's 130, so they're up 200%. I wouldn't be surprised if there's some turnaround soon that maybe is instigated by a poor or less than good expected earnings report, right? They're obviously in a nice uptrend now, but that could change. I wouldn't play this one long or short if I was trading. There's no good, right? It's a little too high. If it was right here, that might be interesting to play a bounce off of the VWAP there. Let's see what's next. Macy's reports earnings Tuesday morning. So if you're looking to play Macy's for earnings, you want to get in Monday, because they'll report Tuesday morning. Look, interesting that they're just kind of basing here right around $20. Their last earnings report, they did have a little bit of a sell-off, and then it was a couple days later popped right back up. There's some interesting potential there. That might be one to watch. Maybe I'll do another video Monday for Macy's. VSAT, why did I throw this one on? They have earnings coming up. Yep, earnings Monday afternoon. Zim, if you got into these guys also have earnings. VSAT was Tuesday afternoon. Zim is Tuesday afternoon. Wednesday, this is the big one that everybody's been waiting for, NVDA. NVDA reports Wednesday after hours. And if you see, obviously you've got to follow along with AI and what's been happening for the last, year and a half, 2 years since ChatGPT. NVIDIA just blew up, right? Everybody, I remember, because I actually, funny, I bought a bunch of NVIDIA down here for, I think my average was like 130, and then I sold it, I think I sold it right here before earnings at 300, because I was like, it's likely they'll come back down, right? They'll come down to VWAP, and I'll get an enter again, and then just blew up since then, right? And I made a healthy profit on that. I missed out on a healthy profit as well. But this has all been what I would call the AI frenzy rally. And everybody, literally almost everybody, was expecting, during this whole period here, was expecting that NVIDIA would come back down, fill this gap, and have, $300 a share again. But it did not. Instead, it continued to surge, and perhaps the most surprising, this is the most surprising to me, is even after this earnings report here, which was a good earnings report, but even after that, right, that's what you're kind of looking at. It's like, if this is just kind of like frothy frenzy in the market, an earnings report is a good way to pull a stock back down. Yeah, it did dip down a little bit, and then it immediately pushed back up to all-time highs again, and most recently, it's sitting almost at all-time highs. So how the heck do you play NVIDIA if you're not already in it? If you're in it, I think you should be selling covered calls. If I was in it right now, I'd be selling covered calls on it. The premium is just phenomenal. Like, even if I'm going to move this all the way out, let's just see, right? Like, I could sell a call 1210 for $100. That's a $300 move on earnings, and I could just collect an easy $100 there, right? I could also go NVIDIA at 1,000. I could collect almost $1,800 on this this right here if I sold a covered call there. So tons and tons of premium to be had here. If you're not in NVIDIA yet and you're thinking like, oh man, how do I get some juiced options? Well, this one is ripe with potential YOLO option plays, right? So if you look at this chart for the last little bit, we've got this ceiling set up here at 950, and we've maybe got a floor set up here down around like 750. And that's kind of it. Unless you're getting really crazy and you're thinking like, wow, like, NVIDIA on this earnings could report something so bad that they drop all the way, retreat all the way out of here and are all the way back down at 500. But these would be the price levels I'd look at: 950, 750, 500. So let's just take a look at the options chain, right? We'll go to $500 first. $500. You can get those for pennies. That's a true YOLO play. Your chances of that making you any money are literally almost nothing. Like, this is the type of thing you would see if an insider had information and they're like, yeah, NVIDIA is going to tank on earnings and it's going to be way worse than anyone thought, and they come in and just scoop up like 100,000 contracts down here. Other than that, you're buying a lottery ticket. 750, not that expensive actually. $100 a contract. I wouldn't go here, of course, because that's the bottom here. Like, let's say it's a poor earnings, they just drop a little bit, and then over time they move down. I would probably look at something in this 800 to 850 range, and personally, I would do it as a spread again. So I would buy like an 805 and sell an 800. That's going to cost me, that's going to cost me $63, and my maximum profit there is 437. So that's a really good risk to reward ratio. If I'm thinking, hey, I want to buy or I want to try to short NVIDIA on this earnings. You can also do the same thing up here, but you're going to have not as good of your cap is going to be a lot less, right? So this costs you 240. Your max profit is going to be 260, and so you'll double your money if you're correct and NVIDIA moves down. And you could also do the same on the other side, right? I could say, no, instead I want to do this on the upside. That's going to cost me 230, and I'm going to double my money because NVIDIA is going to pop big. You could do both as well, right? So you could do something like this. This, I think, is an incredibly stupid play, and I'll tell you why. You're basically saying, I'm going to spend $473 to make a maximum profit of $27, and my assumption on this is that NVIDIA is going to literally, on earnings, they're going to be pinned and not move at all. They'll maybe move $1 up or down. Like, that's just a crazy assumption. The other way to look at it is to play the reverse of that, where you go like this. So I'm going to sell and then buy, and then this one is going to give me a credit of $472. Excuse me. I got mixed up. This is I think the most idiotic play. Credit of $472, and you're basically saying NVIDIA has to get pinned right there. This one is interesting to me. Hang on, why did that not give us the same stuff as before? Well, it's showing up differently now, but maybe I had a different number selected. Maybe it was something like this. Huh. If you were to fill this, it's for some reason it's thinking I want a credit, but that should be a debit. So you're right. So it cost me like $400 and something if I'm gonna buy. Oh, it's because I'm doing it backwards again. Buy here, sell here, buy here, sell here. There we go. $473. This is saying if NVIDIA moves, and let's just put this in the option profit calculator again, right? We're gonna put this right in here. We'll change this to 4 legs. And let me change this to NVIDIA. And we're going to go leg 1 and 2 are calls, leg 3 and 4 are puts. And what were our strike prices? We took in the call side 390 and 395. Oh, excuse me, 930 and 935. So we're going to go 930 and 935. We are buying the 930 and selling the 935. One contract on each of these here. And then, what's the price on those? So we're buying the 930. We're going to just assume it's going to be 43. And we're selling the 35 at 40.25. And then on the other side, on the put side, we are buying the 925 and selling the 920. And we're going to sell the 920. And the 925 is going to cost us 44.45. 45, and I think that was 41.30 if I remember right. 41.30. Yep, and 41.30. So that's what we've got. And you might get a little better fill than this, right? So we're going to calculate this out. And you can see here it is. Okay, Thinkorswim must be having us get a better fill. So let's just, we're going to move these up just a little bit, assuming we get a better fill on our cells. And let's just go like 60 right there. We're going to try to mimic close. And we'll give this one like 42.8. And we'll move this one down to like 2.5. And we're still a little bit off, so let's go 7.5 here. 2.0 there. Put a 5 right there. Okay, there we go. So this is really close to what Thinkorswim is saying. Nope, I messed up again. All this needs to be going up because I'm selling that one. There we go. 26 bucks, right? So they're saying the max profit would be 27, 26, right on there. But this is where it's interesting, right? Where's your break-even points? Your break-even points are here at basically at 9. Well, just below that right there, 920.25 and 934.75. So if we come back here and we just do a couple price lines at 920.25. Thinks I want to correct the bar. There we go. There's 920 right there. And then what was the other side of it? It was 920 on the lower side and 934.75 on the upper. 934. So right about here. So basically what you're saying is as long as NVIDIA trades outside of that range after earnings, you're making your money. Now it's this would be an example of putting pennies down in front of a steamroller, right? Or excuse me, picking pennies picking pennies up in front of a steamroller. Where it's like, all right, is that worth it to you to make 25 bucks and potentially lose 475? Like, yeah, you've got a pretty good shot of NVIDIA moving out of that range, but is that really worth that shot? And I would say no, it's not worth it. If you really want to play NVIDIA and make 25 bucks, I would buy puts or calls and I'd do it in a spread. That's what I think is going to make the most sense there. So that's the biggest one. Target is actually another really interesting one coming up with earnings this week. For the longest time, people would just say about Target never goes down. It was just like, it just up, 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 up. Even when the rest of the market was selling off, it's like up, 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 and they just never go down. And then they did go down, like always, right? Whenever people say something never happens, it ends up generally happening at some point later. And now they're just sitting at this interesting zone here, right? We'll add a bar right up here for this ceiling. And then maybe we've got a little bit of a floor right down here. So Target's going to be one to watch. I'm going to zoom up through the last few of these. We've got about 7 left. Snowflake, another one that's really interesting here. They did an IPO and then had a massive surge up, big sell-off, and they've kind of just been bouncing around right here between 126 and 200, sitting about in the middle of that zone right now. ELF, this one is just mind-blowing to me. They have finally had a dip, but they had an incredible rally from $25 a share all the way up to $140 before pulling back just a little bit, and then zooming up again to $221 a share before pulling back. These guys are a cosmetics company. They sell makeup. I thought it was wild. I tried to short them at about $100 a share. I made a tiny little bit of money on like one of these candles coming down, and then I got out, and then good thing I did, and I haven't tried to short them since. But they report earnings Wednesday. Petco also reports Wednesday. Look at that. Oh my gosh. Oh, I have the wrong stock symbol. I don't know what. Oh no, I don't. Petco. Look at that. Petco is just absolutely demolished right now. Wild. I wonder how Pets is doing. Yeah, both Petco and Pets are demolished. Interesting. People love their pets. I wonder why they're doing so poorly right now. I have to dig into that. That'll be an interesting one. Children's Place, PLCE, they also report earnings Wednesday, and they have had a very high amount of short interest recently, and I think they benefited a little bit from the GameStop AMC because people were looking for other short plays, and they found Children's Place, and we'll see what happens. I mean, they were trading up over $100 a share, got down to $6 a share. This one is on my watch list. I like it. I don't know if I love it though. Wrap, this guy, this one back with the oh gosh, when there were all the riots that were happening and people or like the stuff about like police brutality, people were like, oh, these are a great company, you know, police officers need something else besides guns. And the bowler wrap was an interesting option, but they just have not been able to execute. Like people just aren't interested, or not as interested as they thought they would be. I mean, they've been trading as low as under $1 a share recently. Now they're down here at 165. These guys report earnings as well. The one thing I would do with this is I'm going to be watching. I'm going to be scanning for what looks like potential insider trades, and if there's some insider trades, I might follow, or what looks like to be insider trades, I might follow along there. Thursday we've got Dollar Tree. Dollar Tree looks interesting. Looks like it broke below this range here, and maybe it's sitting at a place where it could bounce on a favorable earnings. What else do we have? We have Build-A-Bear Workshop. I thought this was hilarious. I had no idea that first that they were a public company, and second that they're trading at all-time highs. That's pretty wild to me. So I'm gonna do a little more research into Build-A-Bear. And then, oops, not DOMO. DOMO is the last one that I'll be looking at. They had an incredible rally. Let me show you here. IPO back here for about 23 bucks. Danced around, massive rally to about $100. Massively down, right? These guys are like business intelligence software. From $25 at IPO down to $7 a share. This is another one. I'm going to be looking for some insider activity to see if I can find anything. And I would play this one to the upside. This may actually be, I'm going to add this to the challenge account list. I like that. We're going to add DOMO to that list. And that's about it. So interesting plays coming up this week, guys. I'm curious to know what you're interested in. Did I miss anything that's coming up this week? Obviously, GameStop and AMC are still going to be heavily watched by everybody. But this is the earnings report for the week. So enjoy your weekend. We'll see you tomorrow.